Welcome to Nexgen Capital Insights. Today we present a comprehensive 5-year forecast for Alibaba Group Holding Ltd, covering 2026 to 2030, with a long-term analytical perspective grounded in current data and consensus forecasts. Our goal is to articulate realistic expectations for intrinsic value, macro drivers, business segment evolution, profitability, risks, and the strategic direction over the next cycle. Current valuation, intrinsic value, and market context. Current market situation: as of mid-January 2026, Alibaba's U.S. share price is trading around $165 per ADS. Intrinsic value: independent DCF analyses indicate that fair value estimates for Alibaba, based on long-term cash flows and a moderate discount rate, lie in the $190 to $200 range. These models assume strong revenue growth and improving margins over the next decade. On a relative basis, Alibaba's forward PE is modest relative to global tech peers, reflecting both geopolitical risk in China and a market discount applied to Chinese tech names. What's priced in today? Investors appear to be pricing a scenario of moderate growth in core e-commerce, rapid cloud AI expansion, offset by heavy capex, margin pressure, and continued competitive intensity. The current valuation reflects both existing earnings power from the domestic retail ecosystem and optionality in cloud AI, but not full monetization of those future profits. Dollar cycle and macro environment. While precise macro forecasts are inherently uncertain, here's a realistic framework for how the dollar cycle and macro backdrop may influence Alibaba. 2026-2027. Global growth moderates. U.S. dollar strength fluctuates with interest rate volatility. A stronger dollar exerts pressure on emerging market earnings when reported in USD, slightly compressing BABA's revenue growth on a translated basis. 2028-2030. Gradual stabilization of global trade post-pandemic, increased technology investment cycles, and easing of tight financial conditions could benefit tech stocks broadly. A weaker dollar cycle in the latter half could enhance EM-based revenue when reported in USD. Alibaba's exposure to China domestic growth and international digital commerce means FX influences will affect reported top line but not underlying operating momentum. Revenue and market capitalization growth. Consensus. Forecasts for Alibaba's revenue trajectory over the next 5 years. Project overall revenue, KGR, mid to high single digits annually through 2030, with contributions from all major segments. 2026 revenue, expectations around $170 to $180 billion or more. 2030 potential. Modeling assumptions with cloud and international e-commerce momentum could bring total revenues closer to $200 to $220 billion or more by 2030, subject to execution and macro conditions. Market cap outlook. If Alibaba sustains growth and expands valuation multiples with stronger profit contribution from high-growth segments, a market cap between around $600 billion to $800 billion or more is conceivable by 2030 under a scenario of multiple expansion and robust execution. Conservative base case assumes flat multiples due to geopolitical risk, keeping market cap in a range closer to mid-$400 billion to $600 billion by 2030. Margins and profitability forecast. Alibaba's margin profile will be driven by the mix shift across segments. Near term, cloud and AI capex will weigh on EBITDA margins as infrastructure investment remains elevated. Retail segment margins may remain under pressure due to competitive discounting and logistics subsidies. Long term, as cloud and AI services scale, net margins should improve materially versus today. Analysts and models assume profit margin expansion over the long term, as AI cloud monetization accelerates and capex intensity normalizes. Overall, profitability is expected to be cyclical, subdued or volatile in the near term, improving into the latter half of the decade. Key business segments. 5-year forecast. Alibaba's new reporting structure centralizes 4 core segments. A. China e-commerce. Continues to generate the majority of revenue and strong cash flow. Growth will be modest, with pressure on margins due to competition from JD.com, PDD, Meituan, and Douyin TikTok-led commerce. B. International digital commerce, fastest-growing commercial segment outside China. Expansion in Latin America, SEA, MENA, and Europe expected. Growth rates likely in mid-teens annually, albeit with narrower margins initially due to logistics and user acquisition costs. C. Cloud intelligence is the largest growth engine, with forecasted growth rates 20 to 30% or more annually over the medium term. AI-related revenue inside cloud maintains high growth, albeit off a smaller base. This segment could constitute 20 to 25% or more of total revenue by 2030 and materially enhance margins as usage of generative AI and enterprise cloud expands. D. All other businesses. Mixed performance. Some segments will remain volatile or loss-making before achieving break-even. Larger strategic importance is tied to ecosystem expansion rather than near-term profits. Guidance and strategic outlook. Alibaba's strategic priorities through 2030 include cloud and AI infrastructure, executing an ambitious cloud AI ecosystem, build out with significant capex in global data centers, tools, and models, platform and ecosystem monetization, cross-sell AI into e-commerce, logistics, and advertising verticals, international expansion, targeting cross-border e-commerce growth and partnerships with global players, efficiency improvements, monetization efforts in China, e-commerce aimed at offsetting competitive pressures. Risks and competitive landscape. Primary. Risks, regulatory and policy. Risk, China tech regulatory regime remains a tail risk, with potential impacts on data, competition, and cross-border operations. Macroeconomic slowdown. Weak consumer spending domestically or abroad could compress e-commerce growth. Execution risk. Cloud AI capex is capital-intensive. Monetization paths are not guaranteed. Competition. Global cloud market dominated by AWS, Microsoft Azure, Google Cloud. E-commerce rivals include JD, PDD, Temu, Meituan, and TikTok Shop. Geopolitical and FX. US-China tensions may limit listings, investor access, and supply chains. Long-term investor takeaway. Alibaba is positioned as a diversified tech conglomerate with a mature and monetizable e-commerce franchise that provides stable cash flows, a high-growth cloud AI division that could materially lift margins and earnings through 2030, a large international commerce presence offering diversification beyond China, an ecosystem play advantage with embedded commerce, logistics, local services, AI, and cloud. Investment thesis. And Oyerwak. Base case. Alibaba grows earnings and cloud AI monetization gradually, re-rating modestly in line with global tech peers. Bull case. Cloud AI leadership accelerates faster than expected, delivering significant margin expansion and valuation multiple uplift. Risk case. Competitive pressures and heavy capex slow earnings growth and leave valuation anchored to e-commerce multiples. For long-term investors, the key focus should be on execution in cloud AI, monetization efficiency across segments, and risk management in regulatory geopolitical contexts. Successful delivery on these fronts would justify a steadily higher intrinsic value over the 2026-2030 cycle.